In this video, we are going to discuss about the May 22 amendments. We will divide the May 22 amendments into three baskets. The first one is wherever changes are required in the textbook, we'll go to that page and make the changes. This will be applicable to those who are using May 21, November 21 textbook. Second is a new chapter being added, that is warehousing. And we will deal with some custom amendments in that particular segment. And the third segment will be additional circulars, etc. and amendments through one particular sheet. So those which can be fitted in the textbook, we'll deal with that first. Then we'll move on to warehousing. Then we will move on to other amendments for May 22. Which could be certain circulars, e-invoicing, there have been major changes. Then there are certain segments with regard to circulars on intermediary, which we will discuss in the third part. But all the three parts taken together, let you be very comfortable about one fact, that the amendments are very few compared to the amendments which take place from May to November. Now, what I want you to do is, first you can note down these page numbers. On first page, what you can do is, you can note down these page numbers. You can pause the video, note down these page numbers. Now let's go to these page numbers, and whatever we can, we will write it in the book. Now come to page number 33. Page number 33, the amendment which has happened is in case of time of supply for joint development agreements. And what is amended? Only this green portion has been added. Not later than the date of issue of completion certificate or first occupation, whichever is earlier. That's it. The amendment is only addition of this not later than. But let me explain you the impact of this amendment. See this carefully. Let me give you a brief on this particular aspect first. Say suppose Mr. A is a landowner and he enters into a joint development agreement with Mr. B, who is a builder. Now, Mr. A is contributing development rights of the land, and in return he is getting, say suppose 48 flats construction service, and I will assume that the total number of flats proposed to be built was 100. So they proposed that we will have 100 flats altogether. Builder will make all those 100 flats. A is contributing land and B is contributing construction. They'll make 100 flats. 48 will go to landowner, 52 will go to builder. This is the agreement. Now let me show you that 48 flats belong to landowner's share and 52 flats is share of builder. What do we already know? Say suppose out of this 25 flats he sells it while the construction is going on. I am writing under construction. Sold while the construction is going on. Now if it is sold while the construction is going on, landowner has to charge GST. Correct, sir. What about those which are unsold? 23 flats which remain unsold will be sold after construction. Then this is covered by negative list. Do you agree with this much? Yes, sir. Same is the treatment for 52 flats. Correct? Yes. Now, B will charge GST to A for construction service related to 48 flats. People, will A get ITC of GST charged here? Builder is charging GST to A, will A get ITC? Now the answer to that is, to the extent of 25 flats where A is paying output, A is eligible for ITC. To the extent of 25 flats. To the extent of 23 flats, he will not get ITC. So out of this GST which is charged by builder to landowner, landowner will get proportionate ITC. To the extent of 25 flats, yes, he will get ITC. To the extent of 23 flats, he will not get ITC. Clear with this much? Now the question is, when will builder charge GST to landowner? The law had said builder will charge GST to landowner when completion certificate is issued or first occupation, whichever is earlier. So when the building is complete, that's when builder will charge GST to landowner. Now let me tell you what was the practical problem being faced. See, while the landowner is selling under construction property, he is charging GST. But this GST will be charged only when it is completed. That is completion certificate or first occupation, whichever is earlier. There is a timing mismatch. B will charge GST to A at a later point. A would have already sold under construction property. So there was a timing mismatch where A was not getting ITC on a timely basis. And government added this word that time of supply will be not later than. Time of supply will be not later than completion certificate or first occupation, whichever is earlier. What is the impact of this not later than? The impact of this not later than is, now builder can charge GST to landowner much before completion of building. And what is the use of that? So that landowner can claim timely ITC. Now, I have explained you all this, but if I were to put it in one simple line, ignore all this, just listen to one simple line. Builder can charge GST to landowner at any point of time so that landowner can take timely ITC. But it should not be later than the completion date of the project. Are you clear with this? That's the only amendment. The amendment is adding this word not later than. Clear? Okay. Now come to page number 48. Now page number 48, 1313. There's a power where government can notify the place of supply. Already two services are there in this. Maintenance, repair, overhaul of aircraft, and second one was research and development related to pharma industry. In both the cases, place of supply will be location of recipient. Now, a third point has been added. So first one was already there, that is research and development pharma, and already aircraft and their engines, maintenance, repair, overhaul. These 2 points will already be there with you. The third point which is added is vessel and their engines, maintenance, repair, overhaul. So what is the amendment? Along with aircraft, you can just give a comma and write vessel. That's the amendment. And what will be the place of supply, sir? The place of supply for maintenance, repair, overhaul of for a vessel will be location of recipient. The impact of this is vessel operators will now be eligible to take the benefit of export of service. That is the benefit arising out of this amendment. Sir, if this was not there, what would have been the place of supply? If this was not there, the place of supply for vessel repaired in India, the place of supply would have been India. But now it will be location of the recipient. One important point is it should be a vessel which is used in the business for carrying out transportation. So those are the vessels where the benefit is available for use in business. Okay, so this is the second amendment. For vessel maintenance, repair, overhaul services, place of supply will be location of recipient. Already they had added aircraft, now they have added an additional sector of vessel. Okay. Then come to page number 105. Now there are some new entries also added in exemption, but that's there separately in the sheet. Now I'll just make you cancel this. There's one entry which is deleted. This entry on page 105 has been deleted. Leasing of assets by Indian Railway Financial Corporation to Indian Railways. And obviously the amendment is removing an exemption. The basic purpose behind removing this exemption was IRFC should be eligible for input tax credit. Okay. Now come to page 159. See, e-invoicing, there are some exceptions, correct? SEZ unit, no need. Insurer, no need. Banking company, no need. GTA, passenger transport service, admission of cinematographic film, all this do not require e-invoice. One more entry has been added, government or local authority. Oh, that means government department and local authority will not be required for generating e-invoices. So the provisions of e-invoice will not apply to government department, local authority. Just add this. Okay. Then come to page 168. People, reconciliation statement, that is GSTR 9C. Earlier, this was to be certified by a chartered accountant. At present, self-certified. So now you can replace this with self-certified and this point is deleted. Now for your exams, this is how it looks. You can keep this as a provision. See, if your turnover is up to 2 crore, 9 not required, 9C not required. More than 2 crore, up to 5 crore, 9 required, 9C not required. And more than 5 crore turnover, 9 required, 9C is also required. This is how it is at present. So somewhere here you can make a note of this. GSTR 9 and 9C. 9A has been made optional. 9A for a composition dealer. In fact, that is not there. That form is not there online at all. Because anyways, composition dealer files GSTR for annual basis. So every year government makes it optional. But we have never seen it being filed. Neither it's there on the portal. Okay. Now you can see late fee. Late fee, there has been some rationalization. See, maximum late fee was 5,000, correct? For certain returns, it has been rationalized. Now, there is no change in section 47. Section 47 still remains 100 rupees per day, maximum 5,000. That is same. In real life, for nil return, the late fee is 10 rupees. For CGST, 10 rupees for SGST. And for other than nil, 25 rupees CGST, 25 rupees SGST. But institute has not mentioned it in module or in the statutory update. So we will not rely on that for examination purpose. But what institute has mentioned is maximum late fee for different class of persons which has been notified by government. Let me show you maximum late fee which has been notified. See this carefully. This small diagram will be sufficient. Now, you have to check aggregate turnover in preceding financial year. If last year turnover was more than 5 crore, then CGST maximum late fee 5,000, SGST / UTGST maximum late fee 5,000. This is standard which is even now there. But for 1 and 3B, they have reduced it for other segments. Like if it is more than 1.5 crore but up to 5 crore turnover, then maximum 2,500, 2,500. Sir, below 1.5 crore, below 1.5 crore, 1,000, 1,000. And any case, nil return. Oh, any case, sir, any case. It could be more than 5 crore also. Maximum late fee has been capped at 250, 250. Did you understand this? Now, if you notice for these two segments, government has said that this will apply for GSTR 4 as well. That is composition dealer. So it will apply to 1 and 3B. It will also apply to GSTR 4. C and D only, not B and C, because B and C cannot apply. Hey, just imagine, if your last year turnover was more than 1.5 crore, are you eligible for composition scheme? No, right? So this is how government has rationalized late fee. So you can keep this one particular segment in your book. Aggregate turnover, preceding financial year, CGST, SGST, what will be the late fee? This is the maximum late fee. That 100 rupees per day as per ICI module is same. So I will not recommend you to go by what is there in real life. You can write a note, but better go with whatever is there in ICI module. So maximum late fee notified for your syllabus, we need to learn this. C and D will apply only for GSTR 4, as A and B cannot apply for GSTR 4. But say suppose I will just test you with one question. If my turnover is 6 crore last year and I am filing a nil return late, then what will be the late fee? Then this case will apply. Nil return 250, 250. Clear with this? Yes. Circle these two words and write this entire thing. Okay. Then come to page number 172. You can see audit of accounts. You will delete this, and this is carried forward to 173 also. That also you will delete. So this point has been deleted. Audit of accounts not required now. This was section 35.5 which has been deleted. Then come to 178, very small change. So last time government had added this line that a person whose registration is suspended will not be able to generate e-way bill. Correct? Now what government has done? Now government has changed this line. For the following registered person for outward supply. So you will not be able to generate e-way bill for your outward supply if you don't file return for last 2 quarters, last 2 months as the case may be. So if you have not filed GST returns, you will not be able to generate e-way bill for your outward supplies. Earlier they had said as a supplier or as a recipient. Now they have changed it to for their outward supply. That's the only change. Then come to page 182. Merely a clarification. This is refund chapter. See, say suppose you have paid C plus S instead of I. Then what do you do? If you have paid C plus S instead of I, sir, I have paid C plus S instead of I. Then I have to pay I and claim a refund of this. Now, the time limit for this was from the date of payment, correct? The day you have paid, 2 years will start. CBIC has clarified that 2 years will start from the date of payment of correct tax. Is it good for us? Yes, very good. See this carefully. The time limit of 2 years for applying for refund will start from the date of payment of correct tax. So you can just write a note here on page 282. Wrong place of supply. 2 years from date of payment of correct tax. Not the wrong tax, huh? Correct tax meaning, sir, the day you pay this IGST, na, from there you get 2 years time to claim a refund of C plus S which you had paid. Clear? Okay. Then page 189 and 190, you can just add these two things. Very small amendments but important. One, they have now given an option to withdraw a refund application. This you can write on page 190 top. They have now given an option to withdraw a refund application. That's something very good, because sometimes when there is a mistake which we have committed, now you can withdraw the refund application and file a fresh refund application. Earlier we had to wait till the officer sends a deficiency memo, but now withdrawal is allowed. But withdrawal is allowed before he issues a provisional refund or final refund or refund withhold order. Withhold order where he is withholding the refund or stopping the refund because of any other case where you have a payable amount. Second amendment is the time period spent between the date of application and date of receiving deficiency memo will be excluded for counting 2 years. This is for borderline cases. Let me give you an example. You can make a note of this here, but now listen to this. 4/6/2022 was the 2 years expiry date for refund. I filed my application on 31st May 2022. Application filed. People, have I filed the application within the time limit of 2 years? Yes, sir. It was expiring on 4/6. You filed it on 31st May. Now, after I filed, officer sent me a deficiency memo And what happens in refund application is, if you receive a deficiency memo that it is incomplete, then you have to file a fresh application. And deficiency memo was communicated to me on 17/6/2022. I filed a fresh application on 19/6/2022. Now the question is whether this fresh application is valid because 2 years already expired on 4/6/22. 2 years has expired on 4/6/22. I filed the first application on time, but second application I filed it after it. Now what is the clarification? The time from the filing of application till submission of deficiency memo or communication of deficiency memo will be excluded. So this time period will be excluded for 2 years counting. From 31st May till 17 June. This will be excluded for 2 years counting. Is it a good amendment? A very good amendment for the trade. Otherwise, borderline cases na, just because there is one deficiency, I would lose the refund application time limit. Clear? Okay. I'll again show you this. You can copy these two on page 189 and 190. Okay. Now come to page number 200. Again a very small amendment. Now see, a case of job work. A job worker is required to file ITC-04, reporting all the challans. Correct? So whatever you send for job work, you have to file a ITC-04 form. When principal is sending as well as receiving, both the data have to be entered in ITC-04. This is the compliance to be made by the principal for goods being sent and received from the job worker. Now ITC-04, the frequency was quarterly and the due date was 25th after the expiry of each quarter. So April to June, 25th July, July to September, 25th October. Government has reduced the frequency. Now you can file depending on aggregate turnover preceding financial year. If your aggregate turnover preceding financial year was up to 5 crore, then the frequency will be yearly. Is it, sir? Yes. You will file only once. And what will be the due date? 25th April. Because financial year ends 25th after the end of financial year. And if your turnover last year was more than 5 crores, then frequency is half yearly. So earlier for both it was quarterly, now it has been made half yearly. Did you understand this? So you can delete this quarter on page 200 and write this ITC-04 frequency. Yes? Okay. Now you will come to page 253. Well, time limit for filing bill of entry. Earlier it was before end of the next day, excluding holidays. Now two changes. One, here it will say before the end of preceding day. Following the day, and here excluding has become including, on which the conveyance arrives. So when the vehicle arrives, previous day you have to file bill of entry. Otherwise 5,000 per day for first 3 days and 10,000 per day after that. That is the late fee. Late fee remains same. The only change is these two things: before the end of preceding day, following the day when conveyance comes. So if conveyance is coming on 15 Jan, even though 14 Jan is a holiday, doesn't matter, you have to file it by 14 Jan. Clear? Okay. Foreign trade policy has been extended. So earlier it was extended till 31st March 2021. Now it has been extended till 31st March 2022. Sir, page number 323. So now it has been extended till 31st March 2022. This you will find in various pages, plus one new scheme added, RODTEP, which I have discussed later. First we'll complete all changes which we can make here. Then you will come to page 327. Here also you will find 31st March 21. Earlier it was changed to 30th September 21. Now it has been changed to 31st March 22. Then page number 331. This reward scheme, MEIS, deleted. In fact, this was deleted for November 21 itself. That video also says this. SCIS also is not there in your ICI module, so delete that also. So you can delete page number 331 MEIS and 332 SCIS, both the pages. Then page number 335, only a date change, 31st March 2022. Now let's talk about warehousing provisions. In this warehousing, you need to understand one thing. This is a warehouse. How does the process work? First, we file into bond bill of entry to bring the goods in the warehouse. Correct? Plus, we will have to give a bond which is thrice the duty amount. Sir, what is the time to file this into bond bill of entry? At present, it is preceding the day when the ship is to arrive, and that is all now including holidays. So, say suppose the vessel is arriving on 15th January, then you will have to file into bond bill of entry by 14th January. Whether into bond or bill of entry for home consumption, it has to be filed within these time limits. That is preceding the day of the arrival of the vessel or aircraft. Okay. Now, once the goods are placed in the warehouse, there can be three things. One, you file X bond bill of entry and clear the goods for home consumption. Clearance for home consumption. This is first one. Second alternative which you have is filing a shipping bill. Why is this done, sir? Direct export from warehouse. Oh, from the warehouse you are exporting, sir? Yes. Then that is allowed by filing shipping bill. This is the second option. First option, you clear it for home consumption. Second option, bill of entry for home consumption can be filed. For direct clearance, otherwise here you will file X bond bill of entry or a shipping bill. Now, the third option is re-warehousing. Here you require permission from PO. And then it can be re-warehoused to another warehouse. Why is this done, sir? Normally in case of cancellation, say suppose there is a cancellation of license of the warehouse, then in that case we go for re-warehousing. Okay. Now there can be three types of warehouses. Public warehouse, private warehouse, and the third one is special warehouse. Let me tell you, all the three warehouses are licensed by commissioner. Is it, sir? Yes. It is licensed by the commissioner or principal commissioner. The rank is same. Principal commissioner or commissioner gives the license, whether public warehouse, private warehouse or special warehouse. Public warehouse is under section 57. Private warehouse under section 58 of Customs Act, and special warehouse is under section 58A. These are the warehouses. Now, what is a public warehouse? It is owned by government. And private warehouses, sir? Private warehouses are under other than government, plus they can store only their goods. Oh, is it, sir? Yes. Be very careful. They can store only their goods. That means any third party goods have to be stored in a public warehouse only. Like Reliance Industries having a private warehouse, they can store their goods there, not any other person's goods. Private warehouses, license is given only to that particular person. Special warehouse are under customs supervision. Now these special warehouses are part of a new regime where gold, silver, precious stones can be stored in these special warehouses, but under custom supervision and custom lock. Sir, what do you mean by custom lock? That means without permission from the PO, goods cannot be moved from this particular place. A custom lock is placed for these warehouses. Okay. Now, when we talk about all these warehouses, you need to be very clear about one thing. The time period for storing the goods in these warehouses is 1 year. Plus, extensions can be given. Extensions can be 1 year at a time, depending on what the commissioner agrees upon. So 1 year plus extensions can be given. Sir, is there interest applicable? The answer is yes. There is an interest-free period of 90 days. And after that, interest at 15% per annum. So first 90 days, no interest will apply. Sir, from where does 90 days starts? From date of order to deposit to warehouse. And who gives this order, people? Obviously, this order is given by the proper officer. So once the proper officer gives an order, 90 days free period and then interest at 15% per annum will be applicable. It is calculated on the custom duty payable. Say suppose you directly export from the warehouse, then in that case interest will not apply, because if you import, store it in the warehouse and then export it, then in that case there is no consumption in India. It's a case of export. There is no custom duty payable. If there is no custom duty payable, there is no question of interest. Clear with this? So, time period 1 year, interest free 90 days. Now, if goods are not cleared within warehousing period, then deemed removal and importer to pay custom duty and interest. Now, say suppose the warehousing period allowed for you is 1 year and thereafter you did not seek an extension. The moment 1 year comes to an end, that's the deadline. After that, it's a case of deemed removal. Importer is liable to pay custom duty as well as interest. Now, one interesting point which is there in the law, you need to be very careful with this particular point. If goods are removed from the warehouse other than by clearance for home consumption, export, re-warehousing, then warehouse owner is liable to pay custom duty, interest and penalty if any. Dangerous point, section 73A was added in warehousing, and this was very dangerous for warehouse owners. See, what does it say? If the goods are removed from the warehouse other than by clearance for home consumption, export or re-warehousing, then in that case warehouse owner will be liable because it is in his custody. Now if the goods are lost when it was in his custody, then he is responsible to pay custom duty, interest, penalty. Time to make a mistake. Listen to this and try to think. Say suppose goods are there in the warehouse. The importer now relinquishes the right and he says, I will not clear the goods. In such cases, can custom authorities recover custom duty from the warehouse owner? The answer is no. Reason, sir? Reason is very simple. The moment you say that warehouse owner is responsible, it is only when goods are removed from the warehouse other than these three cases. See, goods can be removed from warehouse only for these three cases. If you remove it other than these three, then only warehouse owner will be liable. Don't forget, primary liability is on the importer. If importer does not pay and goods have been removed from the warehouse by other than these three, then only warehouse owner is responsible, otherwise no. If goods are still there in the warehouse, then custom officers will sell those goods and recover custom duty. There is no liability on the warehouse owner. He is only responsible when the goods which were there in the warehouse have been removed by other than these three means: home consumption, export, re-warehousing. Clear with this? Okay. In the same discussion, there is a concept called as deemed warehouse. What is this deemed warehouse, sir? Now, EOU, EHTP, Electronic Hardware Technology Park, Software Technology Park, Biotechnology Park, SEZ, all these are considered as deemed warehouses. Meaning, sir, they can import inputs and capital goods without payment of custom duty. This is the benefit available. And sir, is warehousing period applicable for them? No. They can store till clearance and no interest is applicable if they are exporting. If they start clearing it into DTA, then interest will not apply, but obviously you will have to pay GST plus custom duty reversal has to be done. which is part of foreign trade policy. But I just wanted you to understand one thing, that deemed warehouses, you can import inputs and capital goods without payment of custom duty. That's the benefit available. See, even in a normal warehouse, can you store the goods without payment of custom duty? Yes. You file a into bond bill of entry. You give a bond thrice the duty amount. Once these two things are done, you can store the goods in the warehouse without payment of custom duty. Then you can clear it for home consumption, export from warehouse or re-warehousing. Clear with this? Now, before we move forward, what I want you to do is you write this entire thing on this warehousing page. There's a blank page available. In that, you write this entire thing. You can pause the video and write it. I'll just show it to you in two parts. This is the first part and this is the second part. Okay. I hope you have written this. Now come to the next page. Now let's talk about the types of warehouse and how does the system work. Let's read the points and we will discuss certain additional points as and when it comes. First thing, what are the types of warehouses? The first one being public warehouse. These are government owned warehouses licensed by commissioner. Private warehouses, again licensed by commissioner. Only the goods of the licensee can be stored under these. Special warehouse, licensed by commissioner under 58A for goods notified by CBIC. But I have given you some sample goods not there for exam. You are not required to remember for what special warehouses are made. These are under custom lock and supervision of the PO, proper officer. Then deemed warehouses, offices of EOU, STP, EHTP, SEZ units are deemed to be warehouses under foreign trade policy. Fair enough, sir. Here comes a point. Say suppose officer gives a license and then the warehouse owner does not comply with the provisions, does not maintain records, does not keep account of those goods, does not discharge taxes which it was his duty to discharge. In such cases, the officer can cancel the license of a warehouse owner. Now, the question is, when the license of a warehouse owner is cancelled, what will happen to those goods? They will be kept as if they are in a warehouse. The treatment will remain same till they are there in that warehouse. But you need to make arrangements that you shift those goods to any other warehouse. Let's have a look at the provision. The license of a warehouse may be cancelled by principal commissioner or commissioner where the licensee contravenes any of the provisions of this act or the rules or regulations made thereunder or breaches any condition of the license. The moment they break certain rules, then he is liable for cancellation. The section also provides that before any cancellation, an opportunity to be heard should be given. You are well aware of this concept for now. No goods shall be deposited in a warehouse whose operation is suspended. See, it is saying no new goods should be deposited. Whatever is there, that has to be transferred. Until it is there, it will still be regarded as part of warehouse. The goods warehoused shall within 7 days from the date on which order of such cancellation is served or within extended period may be removed from such warehouse to another warehouse. So you can remove it within 7 days or an extended period, or cleared for home consumption or exported. These are the three basic votes. The section also provides that the provisions of this chapter shall continue to apply to goods already deposited till they are removed to another warehouse or cleared for home consumption or export. So for that period, it will still be regarded as warehoused goods. Fine. Now comes an interesting topic, warehousing bond. Now let's understand what is this warehousing bond. See this carefully. When we talk about getting the goods into a warehouse, you have to give a bond, correct? You have to agree that if I don't comply with the provisions, then you can recover this amount. You have to give a bond. Now, that bond amount basically can be of two types. One, you can give a bond for each transaction. Like for each storage, you can give a bond. That's first one. The second method is giving a general bond. Sir, what is general bond? Say suppose you give a bond of 1 crore. That my goods keep coming in warehouse, keep a bond of 1 crore. And thereafter, whenever goods come in, the bond amount which is attributable will be debited and balance will remain as it is. Like first consignment was for 10 lakh. So you can give a bond of 10 lakh into 3, that is 30 lakh. Why 3, sir? You have to give a bond thrice the duty amount, correct? Or you can give a general bond of 1 crore and then you might get various goods to the extent of that general bond coverage of 1 crore. And whenever you clear from the warehouse, again then general bond will be intact. Normally it is done for 1 financial year. So you can go for a general bond or bond for each transaction as allowed by the proper officer and as you wish to. Let's have a look at it. The importer of the goods which have entered for warehousing and assessed to duty shall bind himself by a bond to a sum equal to thrice the amount of duty assessed. 3 times the duty assessed, that will be the bond amount. The ACDC is empowered to permit to execute a general bond for warehousing of goods to be imported by him within a specified period. You can go for a general bond as the assistant commissioner or deputy commissioner may allow. If the goods are transferred to any other person, PO is empowered to accept fresh bond from the transferee and discharge the earlier bond. People, can you sell goods while they are in the warehouse? The answer is yes, you can sell the goods while the goods are in warehouse. Now those goods which you have sold, the other person who has purchased can give a fresh bond. The moment he gives a fresh bond, your bond will be discharged. That's what the law is providing. Okay. PO shall cancel the bond as discharged. Oh, that means your bond will be released when the whole of the goods have been cleared for home consumption, exported or transferred or duly accounted for. All consequential charges on the goods, including interest, penalty, etc., have been paid, and all the conditions and obligations for the warehousing bonds have been complied with. If all the 3 are satisfied, one, you have cleared the goods, that means you would have paid duty, or you have exported, that means you have filed your shipping bill, or you could clear it to another warehouse, then in that case bond will not be discharged at that moment. It will be discharged once you get it clear and you complete it. All the obligations needs to be met. You need to discharge interest, you need to discharge any penalty which is payable, you need to discharge custom duty correctly. Fine. Mark it as important. Period of warehousing. Very important, people. Now, when you talk about period of warehousing, you need to be very careful about one thing. When you talk about deemed warehouse, You can store inputs and other goods till clearance from such unit. No problem at all. Till the date you clear from such warehouse, you can store the goods there. Fine. No interest will apply in such cases. Okay. But when it comes to normal warehousing, the time limit is 1 year from the date of order passed by PO for warehousing of goods. Plus, if the goods are not likely to deteriorate, then the commissioner may extend warehousing period by not more than 1 year at a time. That means he has power. He can extend it for not more than 1 year at a time. So it's not a restriction that 1 year plus 1 year. At a time, 1 year extension can be given. He can also give lower period if the shelf life of the goods so require. So say suppose the shelf life of the goods is not very long, then in that case he might give a lower period. What's important is this interest. Interest is payable beyond 90 days from the date of order given by PO to deposit to warehouse, and interest is payable on the duty payable at the time of clearance. Whatever is the duty payable, on that amount interest will be applied. Clear? Okay. Let's solve an illustration on this. Let's see how much you have understood. Right in this space, Mr. A imported goods and filed into bond bill of entry on 17/6/2022. Full stop. The proper officer passed an order dated 6, or you better write dated 19/6/2022 for warehousing. Full stop. The goods were warehoused on 26/6/2022. Full stop. Goods were cleared for home consumption on 11/12/2022 on payment of rupees 3 lakh as custom duty. Determine interest. I would request you to pause the video here and solve it and then play it forward. Now, I hope you have already solved it. Interest will be 3 lakh into 15% into dash divided by 365. We just have to find out how many number of days for which interest will apply. Let's see total days from order till clearance. See, from order till clearance. See, order was given on 19/6 Clearance happened on 11/12. So 19/6 to 11/12/2022. We are required to calculate the number of days. Let's see. June will have 11 days, correct? July, August, September, October, November, and 11 days in December. Now the total of this entire thing comes to 175 days. Let me re-verify. So you have 175 days. Now out of 175 days, interest will apply for 175 days minus 90 days, because first 90 days no interest, so only for 85 days. So 85 days, so how much does this come to? 3 lakh into 15% into 85 divided by 365. So this comes to 10,479. This will be the interest which is payable. So be very careful. First calculate the total number of days. Then 90 days interest will not apply. On the balance days, interest will be calculated. Clear with this? Be careful with the computation of interest in such cases. Okay. Now, there's one point which was part of footnote here. CBIC has a special power. They can waive full or part of interest payable. It may also specify cases where certain class of goods interest will not apply. It's a special power available to CBIC. You must only know the power which is available. That's sufficient. Now let's see what is the right of the owner to deal with the goods. See, what all can the owner of the warehouse goods, that is the importer, what all can he do? After taking permission from the proper officer and on payment of any prescribed fee, before or after warehousing, he is eligible to do these activities. 4. Inspect, sort, deal, show. Inspect the goods, sort the goods, deal with the goods to preserve or prevent any losses, and show the goods for sale. These are the 4 things which is available to you. Earlier, many years back, there was a power available to take samples, but now that's not there. Then clearance of warehoused goods for exports. Any warehoused goods may be exported to a place outside India without payment of import duty. If a shipping bill or a bill of export is filed, and if you are sending through post, then a label or declaration with the post parcel, export duty if any has been paid, and order for clearance of export is received from the proper officer. So either you can clear it for home consumption or you can export it as well. Then if you export it, import duty will not apply. Correct? Okay. Such order may be made electronically through custom automated system on the basis of risk evaluation through selection category. This is common throughout for any bill of entry and any shipping bill. The provisions of this section are important, people, for MCQ. The provision of this section will be operative only during validity period of warehousing under section 61. That means if the warehousing period expires, that 1 year expires, after that you can't say I will export. if you have not taken any extension. So within the warehousing period, you have to clear it for home consumption, export or re-warehouse. In other words, goods cannot be exported without payment of duty after expiry of re-warehousing period. Now, say suppose, sir, what will happen if warehousing period expires? Then you'll have to pay custom duty. Once you pay custom duty, then you can export it and claim a duty drawback. That option is there. But which is better, people? Which do you prefer? Paying and then claiming a refund, or not paying? And not paying, obviously. Plus duty drawback is restricted to 98%. So all those taken into consideration, you have to take a decision of export within the warehousing period. Okay. Then there's one small point. Allowance in respect of volatile goods. See, goods like petrol, diesel, naphtha or certain chemicals get evaporated or they reduce with time. In such cases where these products are volatile, then to the extent there has been such normal loss, custom duty will not be applicable, but you have to make an application. Plus government has also notified certain goods for which this benefit will be available. Let's have a look. Where any warehoused goods being notified goods, obviously aviation fuel, motor spirit, acetone, methanol, raw naphtha, kerosene, high speed diesel, batch oil, wine, spirit, beer, these are only for knowledge, not for exam. You are not required to remember all the notified goods. Are at the time of delivery from a warehouse found to be deficient in quantity on account of natural loss, then ACDC may remit the duty on such deficiency. Goods are notified under this section having regard to the volatility of the goods and the manner of their storage. So it's basically on the warehouse owner. Nature of the goods is important criteria to decide this, and government has notified various goods in this section. Clear? Okay. You just need to know this power. This was asked once. Obviously warehousing chapter was not there since about last 2.5 years, 3 years. Then it's introduced. So this was asked once in the examination when warehousing chapter was there. People, again an important discussion, operations in a warehouse. Now I need your help in this. You need to be very smart and attentive in this. Careful. Let's see. Let's take an example. Operations in a warehouse. I'll give you a broad picture of that. There's a warehouse. You have imported some raw material and your intention is you want to export the finished goods. Sir, I have imported raw material, export the finished goods. Then first I have to clear the raw material to my premise. Thereafter I will be able to manufacture and then export. You are showing an arrow imported in warehouse and export finished goods. Then what did I do? You did a operation in warehouse, meaning manufacturing in the warehouse. Oh, is it permitted, sir? Yes. The special power available with the approval of the commissioner, a person can manufacture in the warehouse. Is it, sir? Yes. So you imported raw material, you manufactured in the warehouse, then you export the finished goods. Normally and generally it would be a private warehouse, but the law does not say this. It's obviously allowed and permitted. Now the question is, how does the taxability work in this case and how will the process flow in this case. So we'll take an example to understand this better. See, why are you carrying out this operation in the warehouse? The reason being, you don't want to pay custom duty because you are going to export the finished goods. The other alternative was you clear the raw material, pay custom duty, export the goods, then claim duty drawback, then claim refund. To avoid all this, you are manufacturing in the warehouse and then exporting finished goods. This is normally not done for very technical products, maybe very simple products which requires very simple manufacturing facility. Let's take an example. Say suppose you import steel. I'll keep the numbers in a particular proportion so that it's very easy for us to calculate. That we can stress more on the provision rather than calculations. I imported steel 100 kgs and my finished goods is knife. So import steel 100 kgs plus I brought domestic material. That is plastic 50 kgs. So I took that plastic to this warehouse. Steel is already imported. Plastic is from domestic market. I am keeping the numbers. It may not be the same proportion in real life. I am keeping the numbers simple for us to be aware of the computation. Total, can I say it's 150 kgs? Yes. So both the raw material taken together 150 kgs. Now out of this I get finished goods, knife, and the weight was 125 kgs. And can you see one ratio? What ratio, sir? 150. The ratio is 2:1. Correct? So imported material to domestic material 2:1. This will help us later. I am just keeping it here. Now, finished goods is 125 kgs. Can you tell me what would be the waste? Sir, 150 kgs was both. Finished goods is 125. So this will be 25 kgs. Clear? Now we need to understand the taxability on this finished goods and on this waste. That's our target. Correct? Let's start. See this carefully. Option 1. Entire finished goods is exported. And how much is the weight of finished goods? 125 kgs. Entire finished goods you export. Let's see the taxability. Let's see the taxability of finished goods. Finished goods, no custom duty. Reason? Everything is exported, people. If entire thing is exported, no custom duty on finished goods. Correct? Because it is completely exported. What about waste? Now waste, the law says if you destroy it, because this waste has some steel element as well. Oh yes sir, there's some steel element in this. Correct. There's some steel element, there's some plastic element. You can separate it, but I am just regarding it as inseparable. And 25 kgs contains steel as well as plastic. So if you destroy it or you export it, then in that case, no custom duty. But if you clear to domestic area, clear to DTA, domestic tariff area. If you clear it to DTA, then in that case the law is saying custom duty as if waste was imported. Sir, value will also be of waste, sir? Yes. People, tell me, is this a beneficial provision? Think. Custom duty will be applicable as if waste was imported. So you will pay custom duty on that 25 kgs as if waste was imported, and the value of waste will be much lesser compared to the value of imported steel. Plus, normally the rate of custom duty on finished products and raw material is higher compared to waste. So you will end up paying less custom duty because the law is saying as you have met the target you were required to export, you have exported, so we give you the benefit on waste. Waste will be regarded as if waste was imported, and custom duty payable will be as if waste was there. Value of waste will apply. If it was to be regarded as import of steel, then in that case custom duty would have been much higher. Did you understand this? This is if entire finished goods of 125 kgs is exported. Correct? Okay. Now comes the second part. See, there can be a third part where full is sold into DTA but will not take it up because the treatment will be same as we discussed in option, as we will be discussing in option 2. Here, say suppose I write half export, or I'll better write half finished goods exported and half cleared to DTA. So out of 125 kgs, 50% cleared for export, 50% cleared for DTA. Let's take it up. Let's understand the treatment. Let's start with finished goods. People, finished goods, to the extent it is exported, that is 62.5 kgs. No custom duty. Agreed? Yes. Finished goods cleared to DTA. This is also 62.5 kgs. Now the law says custom duty as if finished goods was imported. That means custom duty on the knife. But sir, if custom duty on knife is more than the custom duty on steel, then there is a provision where a benefit would be available. Government can waive off that differential. For instance, if the custom duty payable on import of steel, which is contained in DTA clearance finished goods, that is contained in knife, if that custom duty was 10 lakh and custom duty on finished goods comes to 12 lakh, then you can't be at a harsher position. So government has a power to waive off that 2 lakh. Remember, custom duty here will be based as if finished goods is imported, but it will not exceed the custom duty on steel. Proportionate, obviously. Okay. Now coming to the important part, that is waste. People, waste, government has given two treatments. Relatable to finished goods exported. Can you tell me how much will this be in quantity terms? This is 25 kgs. The ratio here is 1:1, which we have used, correct? We have used a 1:1 ratio. Half exported, half cleared to DTA. So relatable to exported finished goods will be 12.5 kgs. Now the treatment of this 12.5 kgs, because total waste was 25 kgs. The treatment of this 12.5 kgs will be same as this one. Same, sir. Obviously, na? The treatment will be same as we discussed here. If finished goods is destroyed or exported, no custom duty. If it is cleared to DTA, custom duty as if waste was imported. But relatable to finished goods cleared to DTA. Now relatable to finished goods cleared to DTA. This is again 12.5 kgs because half. Here the law is saying, see this carefully, custom duty as if steel was imported as contained in waste, and value will also be as if steel was imported. Now be very careful about one thing. This 12.5 kgs entirely is not steel. How much is steel out of this? Steel will be 12.5 kgs into 2 by 3. Sir, how are you getting 2 by 3? We started it here. See this ratio. Steel was 2 parts, domestic material was 1. So I am multiplying with 2 by 3. This will come to 8.33 kgs. So 8.33 kgs, to this extent you are required to pay custom duty as if steel was imported. I'll make it very simple for you. Listen to me very carefully. If you are meeting the object with which government has come up with this entire scheme, that is exporting the finished goods, then government is ready to give you a benefit. But if you clear that finished goods in DTA, then to the extent you have cleared finished goods to DTA, waste relatable to that will suffer custom duty as if steel was imported. Whether you destroy, export or do anything with that waste will suffer custom duty as if steel was imported. But if you want to avoid this, please export entire finished goods. You export entire finished goods, then nothing will apply. This is how the law is framed. Now I will sum it up. You see it on the screen and visualize this. If entire finished goods is exported, you get an advantage for waste. Waste, if you destroy or export, no custom duty. Waste to DTA as if waste was imported. Now talking about the second portion. What's the second portion? Second portion is if some portion was exported, some portion was cleared to DTA. To the extent waste is relatable to exported portion, you will be eligible for benefit. To the extent waste is relatable to DTA finished goods clearance, whatever knife you have cleared on finished goods to DTA, here you will have to suffer, because here whatever waste is attributable to this, you will have to pay custom duty as if steel was imported. Are you clear with this? Now what I would suggest you is, go to your notebook and write this entire example. This entire example, let it come in your notebook. Write it as an example where imported product was steel, finished goods is knife. This entire thing. I just show it to you in two parts also. This is one part. And then this is option 1 and option 2. Clear? Be very careful about treatment. Now you can pause the video and write this entire thing. I hope you have completed this. Now, what I want you to do is come to this page where section 66 and 65 is there, operation in a warehouse. Let's have a look at the provisions. On sanction of the commissioner and on payment of prescribed fees, the owner of any warehouse goods may carry out any manufacturing process or other operations in the warehouse. Let's see duty liability. Post operation, if entire goods are exported out of India, no liability on finished goods because you are exporting entire finished goods. Waste if destroyed, no liability. Waste if cleared to DTA, then custom duty as if waste was imported. This is our advantage. Government is taking custom duty as if waste was imported, not steel. Case 2. Post operations, whole or part of goods are cleared for home consumption. Finished goods cleared to DTA will be liable to custom duty. If custom duty on goods manufactured is more than duty on imported material, if custom duty on knife is more than the steel, then central government has the power to exempt such excess duty. Finished goods exported, no custom duty. Waste relatable to finished goods exported, same as first case. You better give an arrow like this. That is these two. And waste relatable to finished goods cleared to DTA. The quantity of warehoused goods contained in waste shall be liable to custom duty. Circle the word warehoused goods. This is the imported product. Contained in waste or refuse will be liable. Here duty is based on value and ROD. What is ROD, people? Rate of duty of the imported material and not value of waste. It will be based on imported material. Okay. And then you have warehousing without warehousing. Well, interesting discussion. See the term warehousing without warehousing. Now, what is this warehousing and what is this warehousing? Let me tell you, the first warehousing is storing the goods in the warehouse, and the second warehousing is taking PO's order after into bond, and this is storing in warehouse. Now see this. What is this warehousing without warehousing? Storing the goods in the warehouse without filing into bond bill of entry. See this carefully. Storing the goods in the warehouse without filing into bond bill of entry. But sir, why will officer allow it? I'll give you an example. See, my intention was to clear the goods for home consumption. So if my intention is to clear the goods for home consumption, then I will file bill of entry for home consumption. Correct, sir. But I did not file that because certain documents were missing. Now I don't want to file into bond bill of entry, give bond, thrice the duty amount. I don't want to do all that. I request the officer to allow me to store in the warehouse without filing into bond bill of entry. And the moment I get the documents, I will then file bill of entry for home consumption. Sir, why is it done? Goods can be on the port. If it's in the port, then you will incur high demurrage charges from the port. So the charges are very high. To save on those charges, I can request the proper officer that please allow me to warehouse the goods without filing into bond bill of entry and getting into the warehousing process. Clear with this? Let's have a look at the wordings. Normally, goods are warehoused after they are assessed to duty. However, occasionally it may happen that assessment of duty may take time for some clarifications or reports. In such cases, goods lying at docks, meaning port, may incur heavy demurrage. Hence, if assessment is likely to be delayed, Section 49 allows the goods to be stored in a public warehouse. However, such goods are not treated as warehouse goods. I have not filed into bond bill of entry, but still I am allowed to store in the warehouse, as the goods are not assessed to duty. Hence, it is called as warehousing without warehousing. It's allowed for 30 days, then you can seek extension. Let's see. The goods may be permitted to be stored in public warehouse. Only public warehouse are not private. For a period not exceeding 30 days. The commissioner is empowered to extend this period for a period not exceeding 30 days at that time. Every time he can extend it by additional 30 days. In case where the importer makes a declaration that he is unable to provide all the particulars due to non-availability of information, PO may, before filing bill of entry, permit him to examine the goods or deposit the goods in a warehouse without actually warehousing them. Clear with this? Yes? Okay. Now we move on to the last segment of warehousing. Improper removal of goods. See, improper removal of goods, the liability is on the importer, that is owner of the warehoused goods. There is one more section, 73A, custody of the goods. Here, if the goods are removed by other than warehousing, home consumption, export, then in that case, warehouse owner will be liable. So first 72 is liability on importer, that is owner of the warehoused goods, and this is liability on warehouse owner. Let's see. Where the goods are removed from the warehouse in an improper manner, as specified under this section, the proper officer may demand, and consequently the owner shall pay the full amount of duty along with penalties under the Act. Goods removed otherwise than by home consumption, export, re-warehousing, or as provided under the law. Goods not removed within the prescribed period, then date after the end of prescribed period will be deemed date of removal. Mismatch between quantity of goods stored and found in the warehouse without valid reasons. If any owner fails to pay any amount demanded, PO may, in addition to these provisions, cause to detain and sell the goods after giving notice requisite amount of warehouse goods. Obviously, PO has a power to recover this amount. They can sell part of the warehoused goods after giving notice to the owner of the goods. Now, interestingly, let's try to understand what will be the date on which you will choose rate of duty. Let's understand. See this carefully. See, the first thing is, if you file X bond bill of entry, that means clearance for home consumption. See, if you are clearing the goods for home consumption, then in that case, you will file X bond bill of entry. This you have learnt much before. And even at the introduction of warehouse, we mentioned that when you want to clear for home consumption, you file X bond bill of entry. We are aware of this. Correct, sir. Let's see the second one. If there is expiry of warehousing period. Say suppose the warehousing period expires. Then the question is, what would be the date on which you will pay duty? Based on which rate of duty will you pay duty? Here the law says deemed removal, that is date of expiry of warehousing period. The day the warehousing period expires, that day's rate of duty will apply. This was also held in a Supreme Court judgment of Kesoram Rayon, where it was held that if the warehousing period has expired, then rate of duty will not be based on X bond. Rate of duty will be based on the date when warehousing period expires. Important point, huh? The day warehousing period expires, that day. Then goods cleared by other than home consumption, export or re-warehousing. Say suppose you remove the goods by other than these methods, or there is a mismatch. My question to you is mismatch in the quantity. In these two cases, which day's rate of duty will you use? Because in these two cases, you are not going to file X bond bill of entry, but you are liable to pay. So which day's rate of duty will you use? You learned this in childhood at the start. The rate of duty will be date of payment of custom duty. This was any other case. You remember? Direct clearance, bill of entry for home consumption, or entry inward / arrival, whichever is later. Then warehoused goods, X bond bill of entry, and any other case, date of payment of custom duty. This is date of payment of custom duty. Clear? Okay. Let's see this last provision. This is the liability of warehouse owner. All warehoused goods shall remain in the custody of the person who has been granted license under 57, 58 or 58A until cleared for home consumption, another warehouse transferred, exported or removed under the Act. The responsibility of the person who has the custody of warehouse goods shall be as may be prescribed. Where warehouse goods are removed in contravention to 71, you are removing it for other than clearance for home consumption, export or re-warehousing, then the licensee shall be liable to pay duty, interest, fine, penalties without prejudice to any other action that may be taken against him under any other law. It will be the liability of the warehouse owner if goods are removed by other than these methods. If goods are still there in the warehouse, proper officer will recover custom duty by selling those goods. Clear with this? Yes. Okay. This was about warehousing. Now, see certain additional amendments of customs. See this carefully. People, 3 to 4 points. See this carefully. There's a point added under section 25 of Customs Act 1962. And what is that point? See, when government is giving a conditional exemption, it will be valid for 2 years up to the date on which it was issued. Say suppose 15th Jan 2022, government has given a exemption, but this is a conditional exemption under customs. Then this will be valid for 2 years. So 2 years will end on 15 Jan 2024. Now, the law says till the 31st March, which comes after that. So, after expiry of 2 years, 31st March which comes, till that time, this exemption will be valid. An exemption given would be valid for 2 years from the date of notification and till the end of that particular financial year. Clear with this important amendment? See this carefully. Where an exemption is granted subject to any condition, it's only for conditional exemptions and not for exemptions without any conditions. Such exemption, unless otherwise specified, varied or rescinded. Government can remove it much before, government can extend it, that's discretion of government. Will be valid up to 31st March falling immediately after expiry of 2 years. Government gives an exemption 2 years from there and 31st March after that. From the date of grant of such exemption or variation, where government has varied certain terms, from the day they vary, from there 2 years. If a conditional exemption is given by central government on 15 Jan, then such exemption will be valid till 31st March 2024. This can easily come as a case study type question. Unless central government extends it, rescinds it or changes it. Please note that this amendment is only for conditional exemptions and not for unconditional exemption. Unconditional exemption would remain valid unless it is revoked. Clear with this? Okay. Then government has added this agriculture infrastructure development cess. But as this is a specific provision related to only very few goods, it's a tariff rate change. It will not be applicable, will not be asked in exams, but still, say suppose it is asked, you should know on what to apply. This agriculture infrastructure development cess, cess is for a particular purpose. This will be used for development of agriculture infrastructure. They have levied this on import of specified goods at notified rates. This will be applicable on the value determined under section 14, that is assessable value. So on the assessable value, it will be applicable. AIDC on imported goods is in addition to any other duties. Obviously, this is in addition to any other duties. Those specific rate notifications are not applicable for CF final, but if it is given in the exam, then consider it on assessable value. Careful, please consider it on assessable value. Don't forget that SWS is applicable only on basic custom duty, not on AIDC. A social welfare surcharge will not apply on this. However, IGST will be applicable on all taxes and duties which you are aware of. That IGST will apply on everything. Okay. Now, there have been few changes in CVD on subsidized goods and anti-dumping duty. The changes are similar for both CVD on subsidized goods and anti-dumping duty, and that's why I have not given you as part of two different sections. It's part of one. What are the changes? Very simple changes, just to try and catch those who are trying to act smart. If someone tries to act smart, government has come up with provisions which are smarter. That's it. Let's see. First one is Anti-Circumvention Measure. Meaning, sir, say suppose anti-dumping duty is applicable on this pen, but I get this pen in unassembled form, or I change the description, I change the name, I change the product variants. In that case, now the government has the power that if any circumvention is done where you are trying to avoid this duties, then government will notify additional goods on which anti-dumping duty and countervailing duty on subsidized goods can apply. So if you try to change the form, bring it in another way, change the description, change the name, then in that case, custom duty will be applicable on such goods which government may notify, plus additionally government can notify other goods which are trying to be played upon with. So if someone is trying to act smart and bringing it in any other form, government gets to know, government will release a notification, and from the day government starts this inquiry, from that day they can introduce CVD on subsidized goods and anti-dumping duty on such goods. Let's see. Anti-Circumvention Measures. If the central government is of the opinion that the importers are circumventing these two duties, they are trying to act smart by any of the following means, we'll see what are the following means, then it may extend these duties to such other articles, circle this, such other articles, from a date not later than the date of initiation of inquiry, as the central government may by notification in the official gazette specify. Altering the description, name, composition of the article, bringing unassembled or disassembled form, changing the country of its origin or export, or any other manner trying to make the duty ineffective, then in that case we will bring countervailing duty or anti-dumping duty ineffective. Okay, same provisions in both. Absorption of countervailing duty and anti-dumping duty. People, say suppose government has levied anti-dumping duty. The product was being imported for 15 rupees. The Indian fair selling price was 100. Government has a power to impose 85 rupees as anti-dumping duty. 15, 100, 85 anti-dumping duty to make it competitive. What the exporter did, he reduced it to 5 rupees. Now again, anti-dumping duty is becoming ineffective because exporter has reduced the 15 rupees price to 5 rupees. What do? In such cases, government will increase anti-dumping duty. Oh, is it, sir? Yes, they have a power to increase anti-dumping duty from the date, not later than the date of initiation of such inquiry. So if the exporter is trying to play smart, in this case the importer was trying to play smart, in this case exporter is trying to play smart, who is exporting or sending those goods, in such cases government can again revise or modify the anti-dumping duty or countervailing duty. Let's see. If the central government is of the opinion in an inquiry that absorption of these duties has taken place in the following cases, we'll see what following cases, then it may modify these duties to counter the effect of such absorption. Exporter has reduced the prices further, we will also increase anti-dumping duty from a date not later than the date of initiation of inquiry, when the government starts this inquiry, as the central government by notification specify. There is a decrease in export prices without any change in resale prices in India. He has only reduced it, or such other circumstance as may be provided in the rules. Okay. Then you have non-applicability of these duties. It will not apply. Now this point has been made very clear now. Government has added this point for anti-dumping duty, safeguard duty in the same manner. So these duties shall not apply to goods imported by 100% EOU or SEZ unless specifically made applicable, or such articles are cleared to DTA or used in manufacture of goods cleared to DTA, in which case countervailing duty shall be imposed on that portion of the articles so cleared or used as was applicable when it was imported into India. So you can just add here anti-dumping duty because both the provisions are same. You can just add anti-dumping duty. And then extension, obviously these duties can be extended up to 5 years. Earlier there was from 5 years return, so now government has said up to 5 years. So initial period is 5 years plus one extension of up to 5 years. Now if the review is not completed, say suppose government has put it for 5 years, anti-dumping duty has been put for 5 years, it's notified, and the moment that 5 years expires, say suppose the review of whether it should be added again is not completed, then it will still remain valid for 1 year. Plus, if government is revoking it, then the period of such revocation shall not exceed 1 year at a time. So if government is removing it, they can remove it, then the period of such removal will not exceed 1 year. 2 points. 1, review, while the review is going on, it will still be valid for 1 year extra. Plus, if government is revoking it, they will do it for 1 year at a time. Let's see. These duties can be extended for a period up to 5 years. If review is not completed before the expiry of period of imposition, then duty may continue to remain in force pending the outcome of review for further period not exceeding 1 year. However, the said duty is revoked temporarily, then the period of such revocation shall not exceed 1 year at a time. If it is revoked, it will not exceed 1 year at a time. Clear with this? Okay. Now, we had to discuss certain amendments related to May 22 exams. Some of these are already part of the textbook and some of these are to be read separately with this sheet. Now, one very important circular which has undergone multiple changes and there has been a lot of issue on this area is dynamic QR code. Let me tell you some basics. See this. E-invoice. Now e-invoice is required for B2B transactions and export transactions. And sir, when is it required? It is required in any case when any of the preceding financial year turnover exceeds 50 crores. Then such persons are required to generate e-invoice. Do you agree with this? Yes. So e-invoice required for any B2B transaction and export transactions in any preceding financial year where turnover exceeds 50 crore. And preceding financial year starting from 17-18 because that's when GST law came. And remember, any preceding financial year. Now, what about B2C transactions? Now, for B2C transactions, government said that every invoice should have a dynamic QR code. Sir, what is this dynamic QR code? See, this dynamic QR code will contain details relating to that invoice, and if you scan that, you will be able to make payment automatically. You don't have to enter the amount. That's the only use of it. Otherwise, see, in every shop, have you seen that QR code where you can scan and pay? That is called as static QR code. Static QR code meaning you will have to enter the amount which you have to transfer. Correct? But in dynamic QR code, this dynamic QR code contains details of that invoice and you scan it, amount will come automatically, you can make the payment. So did you understand the difference between static and dynamic QR code? Static QR code, you make a payment and you enter the amount and then complete the payment. Dynamic QR code, automatic. You scan it, because it is linked to that particular invoice. So government will be able to track for this invoice what was the mode of payment used. Dynamic QR code should be mentioned on B2C invoices. What is the use of dynamic QR code? It helps track what payment is received. Plus, the customers get an option to pay online. They are not required to rely on cash method of payment. Clear with this? Okay. Who is required to have a dynamic QR code on invoice for B2C transactions? Any person whose aggregate turnover in any preceding financial year starting from 17-18 exceeds 500 crores. So who is required to have dynamic QR code? Any person whose turnover exceeds 500 crores. This limit is even today 500 crores. See, when it started, e-invoice also started with 500 crores. But now any entity more than 50 crores in any of the preceding financial years. Here at present, it is still more than 500 crores. So small entities, are they required to display dynamic QR code on invoice? The answer is no. But entities where aggregate turnover was more than 500 crores, are they required to display dynamic QR code on invoice? The answer is yes. Now, the provision is only this much, but it created lot of doubts in the mind of the industry. And that's why CBIC came up with multiple extensions and multiple clarifications. All those clarifications we will bundle and read it together. Let's read these clarifications together. Let's see. Circular number 146 read with circular number 156. The first question which the industry asked, and let's see what CBIC has clarified. The first question which was asked was, would this requirement of dynamic QR code on B2C invoices be applicable on invoices issued for export? So in case of export, will the limit be applicable? Now, if we see about these exports, whether you are required to mention dynamic QR code. Just imagine this in export invoices. Dynamic QR code so that customer outside India can scan and pay. No sir, doesn't make sense. But see, export are B2C invoices because the party's GST number is not available. What did CBIC clarify? CBIC clarified the notification is applicable to a tax invoice issued for B2C. And to whom is it applicable? For a person whose aggregate turnover exceeds 500 crores in any preceding financial year starting from 17-18. Plus, there are some exceptions where it is not applicable. It is not applicable to an insurance or banking company. It is not applicable to a goods transport agency. Not applicable to a person providing passenger transport service. Not applicable to a person who is providing admission in case of exhibition in multiplex screen. Again, you don't require B2C dynamic QR code. Plus, OIDAR supplier. Hey, you remember this OIDAR supplier? Who is this OIDAR supplier? This OIDAR supplier is basically a person who is outside India and he is providing service to customers in India. In that case, this OIDAR service provider has to register. Is he required to do this dynamic QR code? The answer is no. Plus, they clarified that for export, already e-invoices are applicable, and that's why dynamic QR code is not applicable. In fact, if we just apply some common sense, there is no need of having a dynamic QR code for exports. Clear? Yes. Okay, great. Now, let's see the next question which was asked by the industry. What parameters are required to be captured in QR code? So, industry asked that we will print the QR code on the invoice. But what should that dynamic QR code contain? Let's see what it should contain. It should contain the following information: supplier's GST number, UPI ID, payee bank account IFSC, invoice number, invoice date, invoice value, and GST amount. All this should be there. And they clarified that this dynamic QR code should be such that a person can scan and make a digital payment. Sir, even in static QR code, that is those devices which are there, those small devices where you can scan and pay, there also we can do, na sir. There you have to enter the amount. Just to facilitate this, government brought in an entire provision that you can just scan and pay. You don't have to even enter the amount. Okay. Let's see the third one. Say suppose supplier provides or displays QR code, but customer makes payment without using it. Then cross-reference be considered as compliance with dynamic QR code. Say suppose I mention dynamic QR code, but customer opts to pay through cash. Is it sufficient compliance? The answer is yes. It is considered as sufficient compliance. Are you clear with this? Yes. See, I can only display it on the invoice. I cannot force the other person to pay. Clear? Okay. This is what is provided. Government is saying if cross-reference is provided, don't forget this term. In fact, in entire thing, you will come across this word. If cross-reference is provided, that is sufficient. What government wants is track this invoice, this was the payment. That's what they want to track. Okay. Now, if the supplier has issued invoice having dynamic QR code, it shall be deemed to have complied with dynamic QR code provision. You can use anything, no problem. What is important is cross-reference. If cross-reference is there, sufficient. It is deemed that you have complied with the requirements of QR code. Clear? Okay. Next, see the next one. If the supplier makes available to the customer electronic modes of payment where dynamic QR code is not displayed. So you have not displayed the dynamic QR code, but you have provided UPI, UPI collect and all these modes, and he scans and you are able to provide a cross-reference. Is it sufficient compliance? What does government want? Cross-reference. If cross-reference is given, deemed to be complied. Wonderful, sir. That means government at the end of the day only wants to track payments of B2c transactions. Okay. Is generation and printing of dynamic QR code on B2C invoices mandatory for prepaid invoices? Hello. Hi. Just imagine this. Prepaid invoices. What will you do using dynamic QR code? CBIC clarified. Cross-reference is sufficient. In fact, you just imagine if already it is paid, then what will the person do after that seeing that dynamic QR code? And that's why CBIC declared that cross-reference is sufficient. Okay. Then, say suppose I am transacting through ECO. And ECO is already providing a facility where QR code is captured. Plus payment is also captured. Plus mode of payment is also captured. Is that sufficient compliance or supplier has to do it separately? See, ECO is tracking everything. Each sale made through ECO, each payment received, they are tracking it. Is that sufficient compliance or supplier has to again do it? Let's see what CBIC said. The provision applies separately to each supplier. In case supplier is making supply through e-commerce operator, if cross-reference is given, deemed to be complied with. Sir, at the end of the day, can we say that if payment can be tracked, that is sufficient? Exactly right. I will time and again prove you that's what government wants. They have completely complicated this and brought this provision with so much of rigor just for the purpose of cross-references. Okay. Then, whether dynamic QR code is issued to a person who has obtained unique identification number. Is it required? Because unique identification number is given to UN or embassy, correct? So the question is whether any invoice issued to them, should it have a dynamic QR code? The answer is it is a B2C supply, because unique identification number holder is not a registered person. They only take UIN for claiming refund of tax paid on purchases. They are not registered persons. That's why it will be treated as a B2C supply, and QR code, that is dynamic QR code, has to be there. Okay, sir. Now, let's see the next one. UPI ID linked to a bank account of the payee for collecting money. Whether again bank account and IFSC code have to be mentioned. The industry asked, UPI ID is already there. That is anyways linked to bank account. Do you again want me to mention bank account? What will CBIC say? No. See this. If it is linked to a specific bank account, separate details are not required to be mentioned. Obviously, na? Because UPI ID is linked to bank account. Okay. In case payment is collected by some person other than the supplier, whether in such cases UPI ID of supplier, the UPI ID of such person who is authorized to collect payment may be provided. So, ECO's UPI ID, will it be sufficient? CBIC said yes. If you mention one UPI ID, that's sufficient. It is sufficient for compliance of dynamic QR code requirement. Okay. Now, where the receiver of service is located outside India, but payment is received in INR. See people, if the supplier is in India, recipient is outside India, payment is received in INR, or it is a case where it is branches of the same person. In such cases, is dynamic QR code required? CBIC said no. No. In fact, they went ahead and said that if you are receiving foreign exchange and place of supply is in India, though receiver is outside India, place of supply is in India, then also dynamic QR code not required. So, whenever an invoice is issued to a recipient located outside India, then it can be done without a dynamic QR code. Not required, sir? No, it would not be required. Okay. People, retail sale counter. When you go to a shopping mall, that retail sale counter will ask you to make the payment and then generate an invoice. Now, when you are making the payment and then generating the invoice, they already have a cross-reference. In such cases, should you again print a dynamic QR code? Let's see what they have said. In such cases, where invoice number is not available at the time of digital display of dynamic QR code, that is invoice generated after payment, then the unique order number or unique sales reference number, which is uniquely linked for the transaction, may be provided in dynamic QR code as long as the details of such unique number and cross reference is available. If you have the reference and linkage, that is sufficient. That's the whole motto of this entire exercise. Okay. Then, part payment already received. What about such cases? Let's see this carefully. This is new under Circular 156. When part payment is already received by the merchant in advance, before the dynamic QR code is generated, what amount should be mentioned in dynamic QR code for invoice value? He has purchased for 250, but he had already paid 200 as advance. What will you mention as invoice value? Let's see what they have said. The purpose of dynamic QR code is to enable that the person can scan and pay the amount to be paid. Careful, huh? The law is saying to be paid. That's why when part payment is made, then only remaining amount should be disclosed in invoice value. That is sufficient. The details of total invoice with cross-reference should be provided on the invoice. Government wants to track everything. People, these provisions will get complicated when it is introduced to small businessmen. At present, it is applicable only for a person whose turnover exceeds 500 crores. Fine. So this was about B2C dynamic QR code. Now, let's take the discussion forward. There are some circulars which are given by CBIC. Fairly simple understanding of these circulars would be sufficient. New circulars, let's see. What about GST on supply of food in Anganwadis and schools? Whether GST will be applicable. What is Anganwadi? It is similar to preschool. It is basically a form of preschool which is non-formal education. And is preschool an education institute? As preschool is an education institute, in such cases, food supplied to them will not be liable. Food supplied by them to student, staff, faculty will also not be liable. Are you clear with this? Yes, that's what CBIC has clarified. Wonderful. Anganwadis provide preschool non-formal. They are covered by the definition of educational institute. They will also be covered by the exemption whether sponsored by government or through donation from corporate. Doesn't matter whether it is sponsored by government or through corporates. Exemption will be available. Clear? Okay. Annuity payment for construction of road. People, see. Do you agree that there is a difference between toll charges and annuity payment for construction service? Yes, sir. Now, annuity. What is the meaning of annuity? Payment in parts. Something which government is paying for making those roads, that is construction of those roads, will not be exempt under the entry of toll charges, because exemption is only for toll charges, not for construction of roads. Are you clear with this? Yes, that's what CBIC has clarified, saying that construction of roads will not be covered in the exemption related to access of road or bridge. That's toll charges, not for this. Okay. Central and state board. People, please understand one thing. Central and state board are regarded as education institute for a limited purpose of conduct of exam. Correct? Yes, sir. Now the question which arises is, when they take services for printing of admit cards, printing of exam papers, will they get the exemption? The answer is yes, because admission or examination related services taken by a education institute is exempt. Plus, they charging for examination is also exempt. But say suppose they give accreditation to various colleges, they provide other services, all those will be taxable because they are education institute only for the limited purpose of conduct of exam and not for anything else. Only for limited purpose of conduct of exam. Clear with this? Great. Okay. Now, again a very interesting circular, which is milling of wheat into flour for PDS. What is PDS, people? Public Distribution System. Public Distribution System. Now, understand this. See, there is an exemption entry related to government. Which one, sir? Any pure service provided to government relating to a function entrusted under 243G or 243W of the Constitution is exempt. Pure service or composite supply where goods element does not exceed 25%. Pure service or composite supply where goods element does not exceed 25%. In such cases, exemption will be available. Correct? Yes, sir. Now, the question was, see, there is a mill operator. What does this mill operator do, sir? He converts wheat into flour. He buys wheat, converts into flour and supplies it to state government. And what does state government do, sir? State government will distribute it to various persons for PDS. Correct? PDS is a function which is entrusted to the government. Correct? Government is responsible to distribute food grains etc. under public distribution system. So this is a function which is under Article 243G, 243W of the Constitution. Question to you is whether GST will apply here. Now, when is GST not applicable? GST is not applicable if it is a pure service or it is a composite service where goods element is not more than 25%. But tell me one thing, in case of conversion of wheat to flour and flour is being supplied, sir, that is goods, sir, goods being supplied, goods element is more than 25%. As goods element is more than 25%, exemption would not be available. Are you clear with this? Yes. So what does the entry provide? Now see this. What was the issue? Issue was whether composite supply of service of milling of wheat into wheat flour along with fortification is adding some nourishment material by a person to state government. So the person is giving the service to state government. For distribution of such wheat flour under public distribution system, is it eligible for exemption? What did they clarify? They clarified PDS is covered under 243G. No problem in that. But value of goods supplied should not exceed 25%. If it exceeds 25%, then exemption is not available. Clear? Okay. So, applying the above principles, as the supply of service of wheat to flour, the value of goods exceeds 25%, GST is applicable. Clear? Okay. Important circular for exam. Then, these two are also very important. Intermediary. Now, let me tell you some background about intermediary. See, as per section 13(8) of IGST Act, the place of supply for intermediary services is location of supplier. Now, the moment you say place of supply is location of supplier, what is the problem? The problem is you will have to charge C plus S. Why, sir? Place of supply for intermediary services, if it is location of supplier, supplier and place of supply both are in the same state, you will have to charge C plus S. You will not get the benefit of export because the place of supply is in India. Correct? Now, the question was, what is the scope of intermediary? What all is covered by the term intermediary? Because one sector in India which does a very good job and earns lot of foreign exchange for the country was facing a lot of issue. Which sector, sir? The sector was telecalling and back office sectors, where they basically provide services to customers outside India and any service calls related to those customers outside India are taken by those backend. Now these backend officers, they were charging on per call basis. They are not intermediaries. They were not charging a commission or facilitating transaction between supplier and recipient. They were providing these services on their own account. But department officers were very stringent, saying that this is intermediary. So wherever they found that you are just acting as a middleman, even if you are doing it on your own account, they said we will not treat it as export. Now if it is not treated as export, the direct implication is GST will be applicable. If you fall under 13.8, the problem is place of supply becomes India, you will not get export benefit. But if you don't fall under 13.8, then you go under 13.2 and the place of supply is location of recipient. By virtue of that, it becomes an export transaction. So the question was, how far can intermediary meaning being stretched? What is the scope of intermediary? Let's see what examples have they given and what does the circular say. At the end it says it depends on case to case, but some good points are there in this for the industry and it is helpful to the industry. Important for exams, let's see what it is. Now, who is an intermediary? Who arranges or facilitates supply of goods or services between two persons. There are two distinct supplies. What two distinct supplies? One is the main supply between two principals and ancillary supply is facilitating the main supply where that is intermediary. So, A is supplying goods to B and there is a commission agent who is charging commission. So, there are two supplies, one A to B and agent to person. Correct? Oh yes sir. Let's read further. The ancillary supply is called as intermediary. So, there should be a supply from supplier to recipient. Let's see further. The definition of intermediary is exhaustive because it says intermediary means. Okay. The use of the expression arranges or facilitates suggests that a subsidiary or supportive role of the intermediary, he must not be providing main supply. He should only act as an agent. He should not provide the supply directly to recipient. He must only act as an agent and supplier is providing service directly to recipient. Let's see. In cases where person supplies the main service on principal to principal basis, the said supply cannot be intermediary. If I am only providing directly to recipient, then in that case, I am not an intermediary. Okay. Subcontractor provides the main service either fully or in part and does not merely arrange or facilitate. I have not just arranged, I am actually providing that service. Subcontractor will provide the service. Okay. Now few illustrations will help us to understand whether it is intermediary or not. Let's see. I will read the case, you think over. A software company develops a software for client as per the requirements. A has a contract with B for providing customized software. So A is providing customized software to B. A outsourced a task of design and development of a particular module to C. C may have to interact with B to know the specific requirements. Is it a case of intermediary? People, C is actually developing a particular module. He is providing software service. It is not an intermediary case. He is a subcontractor. Let's see what they have said. C is providing the main service of design and development and not an intermediary. Okay, great. Let's see illustration 2. An insurance company P requires to process insurance claim of clients. Okay, and P insurance company is outside India. in respect of insurance services provided by P to its clients. For processing claims, P decides to outsource this work to some other firm. And which is that firm? Q. Now, Q contracts R, who is into business of providing such insurance claim processing, and arranges supply of insurance claim by R to P. Q charges a commission of 1%. In such a case, main supply of insurance claim is between P and R. Q is merely facilitating. Now Q is only facilitating. They are not providing the service on their own account. In such cases, he is not providing the main service, and that's why Q is a intermediary. Clear? You have to check whether the person is providing the main service to the end user. Okay. Let's see the third one. This is that backend services, BPO, business process outsourcing. This was the reason why this circular was brought. Let's see. A is a manufacturer and supplier of computers based in US. Okay. Supplies its goods throughout the world. A also requires customer care service, BPO, backend services, telecalling, to its customers to address various queries. So A decides to outsource the work to the BPO. BPO charges A for the service. BPO is involved in the main service. It is not an intermediary. Very important. This was the sector why this came. Are you clear with this? So BPO firms directly provide the main service. They are not intermediaries. Clear? Okay. Then again a circular which came on 20th September 2021. Let's see what it said. Some certain issues were clarified, like debit note. A debit note, you will take ITC based on debit note date or invoice date. Sir, debit note date will be used and relevant financial year of that debit note will be used. Are you clear with this? This was an amendment brought on 1st Jan 2021. So any debit note issued after 1st Jan 21, you will see the debit note date and not the main invoice date to check the relevant financial year. Why is it important? Because there is a last date for taking ITC. Do you remember last date for taking ITC? Due date for filing September month return after the financial year, or date of filing annual return, whichever is earlier. Okay, sir. Then physical copy of tax invoice is not required where it is e-invoice. If you can display that e-invoice, that is sufficient. Physical copy not required. This is one important thing. Then people, this is a clarification regarding refund. See, there is a point in refund chapter saying that if export duty is levied on one particular product, then in that case you cannot claim refund because government is levying export duty. Now the question which arises is, say suppose export duty is 10%, but government has given an exemption from export duty. 10% export duty but exempted. In such cases, can you claim refund? Sir, 10% export duty is there as per Custom Tariff Act, but it is exempted. So technically there is no export duty, correct? Can you claim refund? The answer is yes. That's what they clarified. Let's see. Only those goods which are actually subjected to export duty, then it will be covered by the restriction imposed under 54(3) for availment of refund. That means then they will not get refund. But if export duty rate is there, but it is exempted or nil, if it is exempted or nil, then you can claim a refund. Clear? Fairly simple, sir. Okay. Again, people, next one, mark it as very important again. Very important provision, though it is very simple. Very, very simple. See this. We had learnt one aspect. See, to become an export of service, some conditions are required to be satisfied. What, sir? Supplier in India, recipient outside India, place of supply outside India, foreign exchange to be received, and finally, not merely establishment. Sir, not merely establishment meaning not merely branches of the same person. Now the question was, what about holding subsidiary company? Holding and subsidiary company, are they establishments of the same person? CBIC clarified that no, people holding and subsidiary are not distinct persons. There are different persons. Hello, hi, they are registered separately under Companies Act as a separate company. It's a separate legal entity. As it is a separate legal entity, holding and subsidiary will be considered as separate. In such cases, if there is a export of service from holding to subsidiary or subsidiary to holding, will refund be available? The answer is yes, refund will be available. Clear with this? Yes. Let's have a look at it. Let's see. Clarification relating to export of service. Section 2.6, which defines export of service. It has been clarified that company incorporated in India and a body corporate incorporated under a law outside India are separate persons. They are not distinct persons. They are separate persons under CGST Act and thus separate legal entity. They would not be considered as merely establishment of the same person. So will you get the export benefits? Yes, you will qualify as export of service. Clear? Fairly simple, sir. Okay. There are some more clarifications relating to cloud kitchen. This is a concept which has grown very fast. Cloud kitchen is where you set up a kitchen, there are different entities there and they prepare food and supply on Swiggy, Zomato, etc. The question is whether they are supplying goods or service. CBIC clarified that cloud kitchen would be regarded as restaurant service. Okay. One big issue, which is even today a very big litigation matter, is ice cream parlors which sell already manufactured ice creams. Are they supplying ice creams or restaurant which will get 5% GST? See, GST rates are not there in your syllabus, but ice cream is subject to 18%. So if you treat it as supply of goods, 18%. But if you treat it as service, then 5%. Restaurant. Question was, if already manufactured ice creams are then sold, whether it is supply of ice cream or serving. Shockingly, even if you serve it, the board CBIC has said it will be regarded as supply of goods and not a service, even if certain ingredients of service are there. This is surprising for a lot of persons, but for your exams, you will have to follow what is given in the circular. They will not ask you a goods or service related rate entry because it's not there, but still know this particular point because it's very new. Okay. Then service provided by an institution or NGO under central schemes, that is scholarship for disability, where total expenditure is paid by government, will be exempt. Surely, where the total training program where expenditure is paid by government, exempt. In fact, if 75% or more is paid by government, that enjoys an exception. Then, people, in case of satellite launch service, Antrix Corporation, satellite launch service, place of supply is outside India because the satellite is going outside India. Now, there are other entities like New Space India Limited. The question was, when they are providing such service, whether in that case also place of supply will be outside India. Earlier, CBIC had given a circular on Antrix Corporation Limited, saying that if they are providing services to customer outside India, place of supply is outside India because satellite launch service, transportation of goods, as the satellite is going outside India, place of supply will be outside India. So, Antrix will get 0 rating. How does it matter whether Antrix is providing or New Space India is providing? Both will be regarded as same. That's what CBIC has clarified. And it is obvious, no people. Antrix, if it is getting export benefit, New Space India Limited, which is again a government-owned entity, will also get this benefit. In fact, anyone involved in the satellite launch service would get the same benefit. Clear? Okay. Overloading charges at toll plaza, will it be exempted? The answer is yes, it is same as toll charges. So it will get an exemption. Overloading charges are for trucks which have too much load being carried. Some overloading charges are collected. That is equivalent to toll charges, which will enjoy an exemption. Okay. Another very small aspect is giving on hire. What does it mean? CBIC has clarified giving on hire means renting of vehicles. So, if the state transport undertaking is renting a vehicle, will they be enjoying an exemption? The answer is yes. You remember one entry where bus is given on rent to a state transport undertaking, given on hire. So, if they give it on hire to a state transport undertaking, exempt. Hire will include renting of that vehicle, which will enjoy an exemption. Okay, great. Now, people, exemption, there have been some small changes. One is due to income tax. See, income tax, earlier there was only 12AA for charitable trust. Now there is 12AA and 12AB. So they have replaced wherever there is 12AA written in entire exemption chapter. It has now become 12AA/12AB. Okay. Then central government, state government, any training program where 75% or more of the total expenditure is borne by government, that will enjoy an exemption. Okay. Asian Football Confederation is going to conduct Asian Football Confederation Women's Asia Cup 22, which will be hosted by India. So any service by and to them are exempted. No GST will be applicable. In fact, entry fee to this event is also exempted. Plus, FIFA Under 17 Women World Cup. This was to be held in 2020, but it did not happen due to COVID. Now, government has said whenever it is held, it will enjoy an exemption. Whenever it is held, it will enjoy an exemption. Okay. Plus, see, these goods carriages, trucks and other goods carriages take a national permit. That national permit has also been exempted. No GST, sir? No. Lastly, there was one point related to transportation of goods in a vessel/aircraft from a place outside India to India. This exemption was earlier valid till 30th September 2021. Now it is valid till 30th September 2022. So from outside India to India, transportation of goods in a vessel or aircraft will enjoy an exemption. Clear? Okay. Customs and FTP, fairly small changes, nothing much. Anyways, we would have covered this. So, faceless assessment. See, faceless assessment, basically, what would it cover? Faceless assessment would basically mean that officer of any place could assess the bill of entry filed at any other place, so that corruption can be reduced. That's the basic objective. Plus, the officer at Mumbai port might be very busy, but officer at a small port might be free. So that person who is sitting idle can be used to process bill of entries in Mumbai. Better utilization of manpower. One, to reduce bribe and to bring transparency, and second objective is basically to reduce idle time of officers. Now, for this faceless assessment is brought. Faceless assessment, bill of entry filed at one place may be assessed by officer of any other place. Clear? You can just go through this entire thing once. One last discussion. Remission of duties and taxes on exported products. Important. People, earlier there were two schemes. MEIS, SEIS. Merchandise export from India scheme, service export from India scheme. Both these schemes were to encourage export transactions. Anyone who is doing export, they used to get incentive. These were called as reward schemes. United States filed a complaint against India at World Trade Organization, saying that these are trying to stop or incentivize exports, and by virtue of that, it is acting as a non-compete clause. Like, what is happening? The exporters in India are getting undue benefit. For that purpose, they filed a case against India. Finally, India lost the case because these were actually acting as reward schemes. Then government changed the aspect and the way of calculating this. Now MEIS and SEIS is not there. See, MEIS is completely wiped off. SEIS, it is there in existence but would not read for your exams. Because essentially the claims only to a certain date are being processed. At present, it is not being processed. Now, then they brought in remission of duties and taxes on export products. What is this? See this carefully. People, tell me one thing. If I am an exporter and I am exporting goods, do I get a refund of GST which I have paid? Yes, sir. GST I get a refund. Wonderful. What about when I take GTA service? GTA would have used petrol. On that petrol, excise duty and VAT would have applied. What about this? This would have become a cost to GTA and GTA would have charged me more. Like that, anything which I purchase would have suffered this excise duty and VAT, because petrol and diesel are used by most of the industries. All that excise duty and VAT becomes a cost to this exporter. Government said, I will provide you a benefit. I will give you refund of this excise duty and VAT which is inbuilt in your export products. And they came up with remission of duties and taxes on export product. Name has the meaning. Remission of duties and taxes on export product. Excise duty and VAT is being refunded based on a percentage as per government's computation. So whatever is your FOB on that you will get a specific percentage. Say suppose 0.5% of FOB government will give you as remission of duties and taxes on export product. And this will come as e-script on the IceGate website, that is customs website. This e-script can be used for payment of custom duty. Second alternative is it is transferable. Oh, wonderful, sir. So you can transfer it to a person who is importing, and in such cases you get incentivized, and this excise duty and VAT which was there on your various purchases which you can't calculate and quantify, government has calculated and arrived at some percentages which may be low or high, which may be capped, but at least government is giving an incentive of these taxes which you have incurred. Are you clear with this? Yes. Okay, now let's have a look at the provision. There are some exclusions which are important, like EOU, SEZ. These entities already enjoy a lot of benefit. Government has not given them this RODTEP scheme. I feel they should have also got it, because in fact they also incur these costs. So they don't get a refund separately of these. They should have got it, but it's a policy decision which government has taken. Let's have a look at it. The objective of the scheme is to refund currently unrefunded duties and taxes at central and state level. You can write example: excise duty and VAT, which is borne on the exported product, including prior stage cumulative indirect taxes. Maybe transporter or your supplier, they all would have incurred on goods and services used for production of exported product. Under this scheme, a rebate would be granted to eligible exporter at notified rate, circle, as a percentage of FOB, circle, with a cap value per unit of exported product. There would be caps wherever required. However, certain export items, a fixed quantum may also be given per unit. They might say per unit they will get this much as RODTEP. Rebate shall be allowed subject to receipt of sale proceeds within the time limit allowed under FEMA. So if you don't get foreign exchange, then you will have to refund the rebate along with interest. The rebate would be credited in the form of electronic scripts to e-credit ledger under Customs Act, which can be transferred from one person to another, and it can also be used to pay basic custom duty. Remember, not IGST, only basic custom duty. Don't forget this, and don't forget transferable. They are two important things. This can be asked as a theory question as well. People, careful. Ineligible category. Who will not get this? Export of imported goods in same or substantially same form. You imported this product, you exported. You will not get it. Export through transshipment, that is exports originating in third party but transshipped through India. Just because it is transshipped through India, you will not get the benefit. Export products where there is a minimum export price or export duty. If there is an export duty or minimum export price, that means government wants to stop exports. Government will give a benefit for such cases? No. Products which are restricted or prohibited. Okay. Deemed export or supplies of products manufactured by DTA to SEZ or FTWZ. FTWZ is Free Trade Warehousing Zones. Products manufactured by EHTP, BTP, Electronic Hardware Technology Park, Biotechnology Park, Europe Export Oriented Unit, SEZ. They will not get this benefit. Products manufactured or exported in discharge of export obligation under all these schemes. Advance Authorization, DFIA or EPCG. You will not get. Duty Free Import Authorization, EPCG and Advance Authorization. If you are making exports for discharging export obligation, you have already taken the benefit under these schemes, that is Advance Authorization, EPCG, you will not get benefit here. So anyone who has got a benefit earlier will not enjoy this, like EOU, EHTP, BTP, SEZ, Advance Authorization Holder, DFIA, EPCG holder. Export for which electronic documentation has not been generated on iSCATE. Only electronic documentation will be eligible. And finally, goods which have been taken into use after manufacture. Used goods will not be eligible for RODTEP. Important, don't forget to read this very carefully. Clear? Yes. With this, we come to an end of